Good afternoon or morning, everyone. Thank you so much for joining us today. My name is Malinali Ramirez. I am a PhD student at KAUST in the Environmental Science and Engineering program. And I am also leading the Sustainability Seminar Series as part of the Students for Sustainability group, also known as S-Square here at KAUST. I am very glad to welcome you all to one more edition of the Sustainability Seminar Series. Just to tell you a little bit about the story of this initiative, this project started on March 2020 by S-Square with the support of the head of sustainability here at KAUST and graduate affairs. And it's intended to be a platform for rising scientific and community engagement on complex sustainability topics. So our topic for today is investing in living nature for a regenerative future by the amazing Dr. Ralph Chami. Thank you so much for accepting our invitation. So thank you. A little bit about him. Dr. Ralph has over 32 years of experience as a financial economist with 25 years at the International Monetary Fund, where he held senior positions in operations, research, surveillance, and capacity development. He is the co-founder of Blue Green Future and Rebalance Earth. He boasts a broad range of expertise, including remittances, fragile states, inclusive growth, financial markets development, banking regulation, and most recently, valuing natural capital, blue and green, fauna and flora, so as to build markets and an economy around a living and thriving nature. Thank you again for joining us today, Dr. Ralph. The floor is yours.
Thank you, Malinali. Can you hear me?
Yes.
Wonderful.
Perfect.
Thank you. Thank you for the invite, and thank you all for attending. Let me go to the presentation. I understand I have about half hour to make my case, as they say. Okay, and let me put it in the presentation mode. Can you see it?
Yes, we can see it.
Wonderful. Okay, so as the title suggests, I'd like to talk about how by investing in nature, we can ensure a regenerative future. And the question is, where do we start this conversation? Well, let's start with what everybody seems to more or less realize right now, that we as humans, as humanity, we're facing dual risks. And not only the risk of climate change and its impact on our own existence, but the fact also that nature itself and its biodiversity is under threat. And both of them are materializing due to the action of humans. So we are, for the most part, the cause of both risks materializing in real time. Now, it's interesting, it's important to underscore here that if any of these two risks were to materialize, our own existence would be at jeopardy, would be in jeopardy. Question is, how do we tackle both risks? And we need to, because we're in the 11th hour, we need to tackle both risks at the same time. We do not have the luxury of time to tackle one and then the other. Now, for those that work on climate change and climate change mitigation, they've identified that reducing and capturing carbon dioxide from the atmosphere is the way to go. And those that typically work on on nature and biodiversity, they advocate that we need to protect nature, we need to restore nature in order to maintain, keep species from extinction and protecting biodiversity. The question for us is, how do we achieve both objectives at the same time? Again, because we do not have the luxury of time. Well, it turns out that the answer is really in front of us. It comes from the science. It basically says, look, if we were to protect, restore nature, then by definition, we are reducing the risk to nature and the risk to the loss of its biodiversity. And according to the most recent IPCC report, of 2020, it says, well, nature then can boomerang back by helping us to reduce climate change by at least 38%. So in a sense, we already have a plan of action in front of us. And what we have to do is really, if we're serious about this, is to implement it. By protecting nature, we reduce the risk to it and the loss of its biodiversity. And then nature helps us in reducing the climate change risk by at least 38%. All right, so how does nature really do that? Well, science tells us that in the case of the oceans, they're really the lungs of the planet. After all, that should not really be a surprise to us. 4/5 of the planet is water. And these are just examples of how the ocean help us mitigate climate change, be it the phytoplankton, these microscopic organisms that float in the water. They do something incredible. They grab about 33 gigatons of carbon dioxide from the atmosphere per year. That's equivalent to the work of 4 Amazon forests per year. Closer to shore, you have seagrass, salt marsh, mangroves, kelp forests, and other kinds of, and also wetlands and so forth. They also have to sequester carbon from the atmosphere, but they also do other things such as provide flood protection. And when they're healthy and doing well, they enhance fish stocks. The open ocean, I refer to it as the orphan, and that's the part of the ocean that belongs to nobody and therefore it belongs to everybody. According to the scientists, over the past 200 years, actually, the open ocean has been grabbing carbon since time immemorial, but since we've kept data, we can account for about 500 gigatons of carbon dioxide being sequestered by the open ocean. Now, just not to think only it's Flora that does the work. The most recent work in Science, this is paper by Fabio Berzaghi of 2019 in Nature Journal, where he and his colleagues find out that also elephants on land, these are the forest elephants in the Congo Basin, help to sequester carbon in the trees through the way they forage and through the way they move in the forest, and they refer to them as forest engineers, actually. Their cousins in the water, the great whales, also help to sequester carbon on their body and through the way they fertilize the phytoplankton. Turns out that these great whales have a great appetite for krill. They feed on krill, and krill feeds on phytoplankton. And phytoplankton, as I just said, these are the ones that grab carbon dioxide equivalent to 4 Amazon forests per year. In order for them to survive, they need phosphorus, nitrogen, and the limiting factor is really iron. All 3 ingredients are found in the poop of the great whales. So there's a very nice virtuous cycle between the whale and the krill and the phyto, and the phyto and the whales. So when you look at this, science is telling us that nature is valuable to us. But from a societal point of view, from a sort of a monetary point of view, is really this value that scientists tell us nature is helping us in terms of being a great ally in the fight against climate change. Is it valuable to us? Can we put a value to it? Well, the answer is yes. After all of these bodies, be it flora, fauna, blue or green, are grabbing carbon. And we have a market for carbon. And that market, since the Kyoto protocols through the Paris Accord till more recently, has priced the ton of carbon dioxide on the market at least at $100 per ton. So basically, and the question is, one could say, well, why is the price of carbon going up and continues to go up? Well, that's because the world, especially in the Paris Accord in 2015, made a commitment to go carbon zero, carbon negative, or carbon neutral by a certain date and time, which was about 2050. And that was predicated on actions being taken at that point in time. But of course, as Greta said, there was a lot of blah, blah, blah. No one did anything. And as a result, that date and time moved against us. It's 2040. And again, we met and we talked and we didn't do anything as a global community. And that date and time is moving closer and closer. And that's why the latest AR6 is sort of ringing the alarm bell saying, look, we got to be serious about this. What that translates I'm a financial economist from a sort of a market side, is that there's a tremendous demand and urgency to the demand for carbon offsetting, carbon sequestration, grabbing carbon from the atmosphere. That's where the demand for carbon is going up. And as a result, the price keeps going up as long as the supply is not, there's no excess supply of the technology that grabs carbon dioxide from the atmosphere. Now, knowing that there's a price for carbon, we can go back to the science and say, well, all these bodies, be it flora, fauna, blue or green, are providing carbon services. Can we value those services? And the answer is yes, we can. Let me give you a few examples. Using the pricing of carbon, not even the $100 per ton. I think at the time we did the work on the whales, the first paper was about, we used $24 per ton. Or if you like, $50 per ton, but you can value the services of the lifetime services of a single great whale at $3 million. That would be the discounted present value of carbon sequestration by a whale over her lifetime. Same thing with the elephants. We can look at the elephant and say, well, here's an elephant that lives 60 years and may give birth, may not give birth. Some may survive, don't survive. If we were to follow these generations over 60 years or 100 years, what would be the present value, the discounted present value of their carbon sequestration service? It would be a minimum of $2.6 million. In fact, if this elephant could speak human language, she would say something like this: why don't you stop killing me, poaching me, and by the way, why don't you pay me a salary? And that salary would be about $55,000 a year, because I'm basically helping to keep you alive, and I'm doing something that's valuable for society. That's basically what we're doing here. We can go into the water, and this is work that we're doing in the Florida mangroves. And mangroves, we can value the carbon sequestration services of the mangroves. That's roughly about $1.6 million per square kilometers. This is work we did for the UK Saltmarshes. It was about $1.5 million per square kilometers. And this is work we're doing with Professor Carlos Duarte. We're valuing the carbon sequestration services of seagrass worldwide. And as you can see, the number is incredible. I will talk about it later when I get to the seagrass as to why that number may be so large. So as you can see, all these bodies have tremendous carbon sequestration value from a market perspective. And this is the orphan, this is the open ocean. If we were to look at the 500 gigatons of carbon dioxide, if you were to multiply that by $60 per ton, you'd get about 30 trillion. That's the value of the stock of carbon that is sitting suspended in the water between 1,000 meters and all the way to the bottom. If you were to differentiate that equation, the stock equation, you would get the flow equation, and that would add, if you were to do mathematics of it, that would add another 30 trillion to this one in terms of the present discounted value of the yearly flow of carbon dioxide into the oceans. So as you can see, the science tells us nature is a great ally in the fight against climate change. We can apply market valuation to some of the services that we can identify, and that tells us that nature is incredibly valuable from a monetary point of view to our society. So what we're really saying here is that we're identifying a new source of wealth, because typically we had zero market value for living nature. That's what we're talking about here. What the science is telling us is the value of a living nature. Using some market prices, we can value some of the services of the living nature and basically identify a new asset class, which is a living nature, flora and fauna, blue and green. Now you'd think, well, my goodness, I mean, these numbers are quite large, so money must be coming into this new asset class in order for the site to benefit from it. Well, here it is. Look at the amount of money that is needed to protect nature itself, living nature, is this large bar here. And this is the amount of money that is coming into nature right now. Woefully short, woefully small. and mostly is philanthropic. So this is work by a number of authors, basically identifying that the financing gap in order to protect nature and its biodiversity is between 400 billion and 700 billion dollars per year. Question is, if we don't do something about it, basically what this is saying, if we want to protect nature, restore nature, we need all this money, okay, close to $1 trillion. But we are nowhere near that. And asking people to give more money from a philanthropic point of view or altruism point of view is going to fall on deaf ears, because basically people are voting with their pockets and they're saying, this is how much you're willing to give. So how are we going to come up with the additional amount of money that is needed? Since we've exhausted the altruism and the philanthropic motive, question for us, can we bridge that gap through an investment proposition? Meaning, can we claim that nature is an investable proposition? Well, that's what I want to convince you is yes, we can. So let's see how we would make that case for nature. So I thought I would put it down for you in a sort of what is needed, what is the recipe, okay, in order to bring investment into nature and to help develop nature markets. Now, the first proposition one is that we need to be able, if you want to bring investment forward, just think about it yourself. If you want to invest in a project, somebody comes up to you and says, I have a great project I would like you to invest in. First question you're going to ask is, what is this project about? Okay, this project is like this. Okay, how much is this project supposed to yield for me, in terms of what are the cash returns in the future? What are the returns on this investment? And so that's the first thing is, can the owner of the project really tell you what the returns are going to be going forward? That's the only way to scale up. And here I want to underscore this point because it's very important, because conservation right now is not based on bringing investment forward. Conservation right now is about what we call in finance spot transaction. If you're purchasing carbon offsets, basically what it is you see how much carbon is being sequestered on a yearly basis, and then you purchase that amount of carbon. That's a spot transaction. We are unable to scale up because we are unable to tell the investor, for whether it's mangrove, seagrass, salt marsh, or whatever it may be, that natural asset, we're unable to project into the future how much carbon this natural asset will be able to capture over time, so that the investor would say, okay, here's my money today. So the first one is being able to project future returns. The second one is, well, we're talking about a natural asset, be it forests, be it elephants, be it whales, be it salt marshes, seagrass, mangroves. Question is, who owns those assets? We need to identify, if you're going to have a contract in the market, a buyer of carbon wants to know with whom are they dealing, who's on the other side of the transaction. Okay, only when we're able to provide the legal framing of this, or to use the language, codify the asset in the law, then we're able to convert the asset to capital, and then it enters the balance sheets of the countries, whoever owns the asset. The third problem that we need to deal with is mitigating the informational problems. Presumably you are investing, let's say, in the carbon that is sequestered by the seagrass in the Bahamas. You need to know, okay, so I'm buying this carbon. Presumably whoever is selling me the carbon of the seagrass is looking after the seagrass, because you have to look after the asset that is producing the benefits. So how do I ensure that that is really happening? How do I ensure that my money that I'm paying for the carbon is going to look after the seagrass and to look after the stewards of nature? The fourth problem that we have to deal with is the issue of what we call time consistency. If I were to give you my money today, if I'm the investor and I'm purchasing carbon forward for the next 5 years, how do I know that you are going to continue looking after that asset over time? Okay, today you may tell me yes, but how do I verify that there's going to be no renegotiation of the contract or changing horses midstream, as we would say? All of these things have to be tackled if we are to build markets around nature. Okay, so of course, within all this, there's what I call the governance challenge. Since we're talking about nature markets, we need to ensure that nature markets are there to protect and restore the natural resources, because we are talking now about the benefits from a living nature, of a living nature. So we need to make sure that the money that's being, the flow of money through the sale of carbon or other biodiversity credits are coming back to look after nature and to provide for what we refer to as nature stewards. These are the indigenous and the local communities, and to help fight climate change. So we need to tackle all these issues, and I will tackle them one by one and show you how we can arrive at a nature-based economy. In order to do so, I'd like to introduce a new phrase which we refer to as science-based finance. This is what I'm going to use now in order to build the story for us. Basically, what we're saying is science has been showing us the benefits of a living nature to us. Okay, but what's missing is there's no market value for the benefits that the science has been showing us in terms of the ability of a living nature to provide for a better living for us. What's also missing is we have the stewards of nature. These are the indigenous and the local communities who've been looking after nature, ensuring that nature continues to give us all these wonderful benefits and help fight climate change, but neither the stewards nor nature is being paid for its services. In fact, conservation, until this work comes about, conservation was always looked at as a cost proposition. And when you talk to whoever, they always say, well, I'm always being asked to give money to look after mangroves or seagrass or the cheetahs or the bonobos. This is typically the story about conservation. So what science-based finance is going to do is going to provide the market valuation for science, is going to help recapitalize nature and pay the stewards for their services. And by doing so, we're going to move conservation from being a cost proposition to a profit proposition. That's what I want to show you, is how we're going to do that. And it's science-based finance because I'm going to show you why that is so, where that statement comes from. All right, so let's take an example. This is work we've done for the Cayman Islands. If the Cayman Islands have magnificent mangroves, and they're split between what's called fringe and upland mangroves. This is just focusing, I just want to show you as an example, mangroves grab carbon vertically. And the squiggle, the black curve is basically the data coming from the scientists telling us how much a mangrove, the generation of mangroves, will grab carbon in terms of depth. Okay, knowing the empirical data, we can actually use sophisticated modeling in order to basically model the relationship between the soil carbon, how much carbon is being grabbed per centimeter. Now, we also know the rate of accumulation of carbon over time. As a result, we can also move from looking at carbon per centimeter to accumulation of carbon over time. That's what we're after. And if we were to do so, it would look something like this. We'd be able to figure out how much carbon is being sequestered per year, okay, per generation of mangroves or across different generations of mangroves. We can go vertically, just a generation of mangrove or a plant of mangrove grabbing carbon vertically. We can do it horizontally, and then we can sum it also over time. Once we do that, then also we can go to the markets, and from the markets, these are futures contracts that are pricing carbon for the next between 2022 and 2030. So that's about 8 years. And what we can do, we can think of basically, because we have the ability through the model to project how much carbon is going to be captured, let's say for the next 5 years. Therefore, today we can price, the value of the carbon that is captured by the fringe area of the mangroves in the Cayman Islands. Okay, so this is a 5-year contract. for purchasing of carbon today, okay, in the fringe mangroves of the Cayman Islands. And what this is telling you is that that contract is worth 59,000 euros. This is in euros per hectare. So if you have 100 hectares, then you can talk about $5 million, almost $6 million. For the total mangrove area in the Cayman, it's about 40 million euros. That's just in the fringe area, okay? So that's the answer to the first one. Can we bring investment forward? And the answer, yes, because what we are doing here, let me just go back to underscore what I'm really talking about here. This is, we understand the physiology of the mangrove. Based on the physiology of the mangrove, we can build the forecasting model, which is a nonlinear model, okay? And using prices, futures prices, we can actually find out what the value of the contract for selling the carbon of the mangroves for the next 5 years today. Can we do the same for seagrass? Yes, we can do, but again, the physiology of seagrass is not the same as that of mangroves. This is the work of Professor Carlos Duarte, basically saying that, look, the seagrass grows exponentially for 50 years and then forever at a constant rate. So using that technology, that empirical evidence, we can also build the nonlinear modeling, which allows us to figure out how much carbon is going to be captured by the seagrass. This is our paper with Professor Duarte, figuring out how much carbon is going to be grabbed over time. This is globally. And on the right-hand side, we can figure out what the cash flows are going to be from the sale of the carbon of the seagrass over time. We can apply this for the case of the Bahamas. Turns out that the Bahamas is sitting on 30% of the global seagrass. This is a paper that appeared quite recently in the last few months in Nature Communications by Professor Duarte and the group called Beneath the Waves. They used tiger sharks to map the seafloor of the Bahamas, where they discovered that the Bahamas is really sitting on, imagine, 30% of the global known biomass of seagrass. So in terms of hectares, the Bahamas is sitting on 93,000 hectares. And the additionality, they can go up by another 40,000 hectares. And if you were to use the modeling that we have, then you'd be able to say, if we were to restore that 40,000, you're adding about $145 billion. This is what you would be able to apply. And we can do the same thing as we did with the mangroves. We can construct contracts to sell the carbon of the seagrass for the next 5 years or 10 years or 20 years, depending on the needs of the buyer. We can also apply this in the case of fauna, in the case of the elephants. And this is our paper that appeared in the Proceedings of National Academy of Sciences. I want to show you how you can apply that in the case of the Gabon. Gabon, according to the published data, had 45,000 elephants, which they can go back to what they used to be, about 190,000. And if we were to do so, then just the stock itself is worth about $20 billion. And the flow going from 45,000 elephants to 190 would add an additional $11 billion in terms of the carbon services of these elephants. So for the Gabon, the total value of the carbon just sequestration by their elephants is about $33 billion. And if you were to think of it in terms of flow basis per year, just from the sale of the carbon of the elephants, that's about close to $1 billion per year. So that's the answer to the first question, which is, can we bring investment forward? Well, yes, because now what we are able to do is to say, this is how much carbon any of these assets, natural assets, can grab today in expectations. Of course, we can provide the confidence bounds over the estimates, be it the science estimates or the model estimates, and we can also figure out what are the price volatility, the volatility around the pricing also. Now, the second problem that I identified is the legal framing. Okay, especially when you're selling the services of a living nature, who's speaking on behalf of that nature? We need to codify that in the law. Wanted to show you, for example, in the case of the Bahamas, it became very clear. The government and the legislator took action to basically say any asset, blue or green, fauna or flora, in the Bahamas, all the carbon belongs to the government. And these are the documentation from the government of the Bahamas, basically making it very clear that if you were to purchase the carbon of the seagrass of the Bahamas, you're dealing directly with the government. That gives you clarity as who is speaking on behalf of the asset. Okay. Next question, the third question is, how do we mitigate informational asymmetry? I'm sitting in the US, I'm sitting in Saudi, and I'm purchasing the carbon services of seagrass in the Bahamas. Okay, how do I make sure that the money that I'm paying for the carbon is flowing back to look after the seagrass and the sea turtles and the tiger sharks? Well, so on the left-hand side are the buyers of the carbon or the biodiversity services, whichever one you would like. That could be companies, that could be financial, it could be households, could be industry, could be financial companies that made pledges to go carbon zero or carbon negative or carbon neutral. They would be paying money for the services of flora and fauna. Now, I want to underscore one thing here. We do not advocate the sale of the asset itself at all. What we're saying here is whoever owns that asset, be it mangrove, seagrass, corals, whatever it is, they may retain the ownership of it. All that you're doing is you're selling its services. Think of yourself as owning an apartment, and what you're doing is you're leasing it or you're renting it out, if you like. So what we're doing is we'll use sensors and technology to make sure that the asset is performing as it's supposed to. And the contract goes on the blockchain, or if you like, digital currency, in order to ensure transparency and traceability, because you want to make sure that the money that you are purchasing, that you're paying, is going to look after the seagrass if you're purchasing the carbon services of the seagrass. And it's also going, if the government owns that seagrass, that the government is getting that money, or if the communities are the ones who are the stewards of nature, are the ones who are supposed to receive that money, then indeed they are receiving that money. The beauty of this is that the blockchain will also allow the communities themselves to be able to ascertain and figure out who is the buyer. So it's a two-way conversation. It allows the seller of the services to also be involved in the contract itself. These are smart contracts. All right, the fourth problem that we needed to solve is the time consistency. How do we ensure that the promises made today are basically kept into the future? And one way to do so is to put the money that comes from the sale of the carbon or the biodiversity credits into what we call a nature wealth fund. The asset itself, the value of the asset itself enters the balance sheet of the owner, but what we're talking about here is the income from the endowment. So the money comes in, it's invested, the return on the investment comes under very tight control to ensure that that money is going to look after, if it is nature itself, if it's the fauna, flora and fauna, if it's the stewards of nature in terms of providing employment, and providing income, providing development projects. These are the governance of it is under very tight control. That solves the problem of time consistency. Now, in terms of the pricing of carbon, I personally have a plea to the rest of the world saying we cannot have multiple prices for the same molecule of carbon. Today, if you look at the markets, you'll find that when Europe trades the carbon among themselves, it's about $100 per ton. In fact, we know of companies that are purchasing carbon from a machine for $600 a ton, but then when the global south comes to sell their carbon, they get only $10 or $5. That is not right from an ethical point of view, from a moral point of view, nor from a market point of view, because having these multiple prices for the same molecule is not helpful in terms of our convergence to fighting climate change and protecting nature. All right, once we do all of this, the claim is that now we've arrived at a new paradigm that is nature and people positive by definition, and by construction. We are constructing the nature markets to look after nature and to look after its people. These are some of the benefits that a nation would get from the sale of the ecosystem services of its nature. You never sell the asset, you're just leasing out its services. You're realizing untapped wealth, you're creating sustainable investment. Why is it sustainable? Because you can only accrue the value from looking after nature. So by looking after nature, nature continues to provide those values, and therefore the investment is sustainable and the returns are sustainable. You're raising a new source of revenue, which also helps to diversify the economy. And one thing we have all learned from the COVID experiment is that many of these countries that are sitting on natural capital have realized during COVID that the tourist dollars disappeared. The interesting thing about nature income, or the income from a sale of the ecosystem services of nature, is that they're acyclical. They don't depend on the business cycle necessarily, nor are they sensitive to, or they impacted by, God forbid, another COVID type calamity. So it's a good way to diversify the economy. And of course, the money is coming back to provide income to the local communities, which is also helpful. So when you put it all together, I just wanted to show you that we would arrive at what I would like to believe is a win-win-win model. Okay, who benefits from the sale of the ecosystem service or investing in nature? Well, whoever is sitting on the natural capital. In this case, if the sellers of carbon or biodiversity credits, if it's the government, let's say it's the government of the Bahamas, they're getting income from an acyclical source. They're diversifying their economy, as I said before. That improves their fiscal stance because the value of the asset will come on their balance sheet. It will change their net worth. It will change their ratings. It will change the debt sustainability. It's really, it has a tremendous macro impact on the economy as a whole. What do the buyers of carbon and biodiversity credits get? They get a lot more than just buying carbon to offset, to meet their targets, which is carbon zero, carbon neutral, or carbon negative commitments, because they are investing in nature. And by investing in nature, flora, and fauna. So there's a food security angle at this. They're investing in the health and the wealth of the local communities. So then you're really tackling SDGs 1, 3, 8, 10, 13, 14, 15. Okay. And of course, the nature itself benefits because we are looking after nature in perpetuity. We're allowing it to restore, to rejuvenate. And when we enhance resilience in nature, we enhance resilience in the people. We stabilize people in their land. So there's a knock-on effect directly and indirectly on indigenous population and local communities. We're providing them sustainable income, health, and well-being. We're alleviating poverty and providing meaningful employment. As you can see, there are no losers in nature-based, what I'm talking about, a living nature-based economy. Thank you for your attention.
Thank you so much, Dr. Ralph. I think we will stop here. So thank you so much for such an enrichful and excellent talk. I'm sure all the attendees bring something new with them today, because as we are in a science and technology university, we are not that familiar with this kind of topics, and it's very, very important. Thank you so much. I really enjoyed it.
Thanks, your Osha. And we need the science and technology. We need the sensors. We need the science. I mean, this is science-based finance, science-based economics. By the way, what this does, I just want to tell your audience, this is a new way this is finance that is based on science. So it breaks down the silos, and every asset that we ever valued is by sitting down. We sat down with Carlos for 2 years to understand his work on seagrass and the blue carbon. We sat down with Fabio Berzaghi, on the elephants for a year and a half. to understand what is the science. So this is really breaking down the silos. This is interdisciplinary work. And I think this is the future of how sort of the intellectual discourse should go. No more finance people don't talk to science, don't talk to ecologists. We all talk to each other because we are all part of this planet and this wonderful earth. Thank you so much.
I totally agree. Thank you so much. So,
Thank you.
and thank you all for attending, all the audience, and thanks to the S-Square members who made this event possible, to Graduate Affairs, the Sustainability Office, and see you in the next one. Thank you.
Bye-bye. Have a good day.